Welcome back to Sawyer Silver Vault. Something is happening in the Bitcoin market right now. And I mean, right now. Not last week, not next month, as we speak. Most traders are looking at the price, looking at their charts, and seeing what appears to be just another quiet, boring day in the life of Bitcoin. But what if I told you that the silence itself is the signal? That the market is coiled tighter than it has been in months, and that a move is brewing that could catch the vast majority of investors completely off guard. We are witnessing a phenomenon that few in the mainstream financial media understand, let alone are talking about. It's not a crash. It's not a massive rally, at least. Not yet. It's something more dangerous, more deceptive, and potentially more profitable if you know how to read the signs. We are watching a silent breakout unfold, right under the noses of retail traders who are distracted by the day-to-day noise. Everyone is focused on the price action, on the recent dip towards 62,000, on the fear and uncertainty gripping the market. But the smart money, the institutional players who move markets, they're not focused on the present. They're looking at the position of the pieces on the board, the macroeconomic pressures, and the hidden buying that is happening in the shadows. The narrative of Bitcoin is dead is being peddled while a quiet accumulation phase of unprecedented scale is taking place. But what is causing this stealthy activity? What happened that shifted the balance of power without the price making a dramatic move? The answer involves the Federal Reserve, the largest asset managers in the world, and a hidden signal in the on-chain data that I've only seen a few times before. And that signal suggests the calm before the storm is almost over. Here's what's really happening. Last week, the financial world was watching the Federal Reserve. They held rates steady, a decision that was broadly expected. But the language, the updated projections, and the shift in tone were anything but expected. This was the first policy meeting for the new Fed chair, Kevin Warsh, and his debut was a hawkish surprise that sent ripples through all risk assets, including Bitcoin. The message was clear. The fight against inflation is not over. They even raised the 2026 rate forecast, signaling that the era of cheap money is officially behind us. The market reacted instantly. We saw Bitcoin slide from its pre-announcement levels around $66,000, punching through key support, and settling near the $62,000 to $62,500 range. But here's where the narrative takes a turn. A hawkish Fed is traditionally seen as a death knell for Bitcoin, an asset that thrives on liquidity and low interest rates. Yet, despite this, and despite a stronger dollar climbing to its highest level in over a year, the market didn't collapse. The selling pressure was absorbed. Now that might sound like a bearish sign, but consider this. The fact that Bitcoin was able to hold these levels in the face of such strong headwinds is actually a testament to its underlying strength. But don't take that at face value, you have to look deeper. While the macro picture was seemingly turning against Bitcoin, we saw a reversal in the institutional flows that had been the dominant narrative of the past few weeks. The headlines were screaming about a record collapse in institutional demand, with one aggregate metric falling to a historic negative. The spot ETFs were bleeding, posting 13 straight days of net outflows, shedding billions of dollars, and new whale wallets were sitting on massive realized losses. It looked like a coordinated institutional retreat. However, one development changed everything. Just days after that streak of outflows, the narrative shifted abruptly. The data shows that institutional confidence is returning. In early June, we saw a significant acceleration of capital into the market, with nearly $1 billion in weekly inflows pouring into spot Bitcoin ETFs. BlackRock's IBIT and Morgan Stanley's MSBT led the charge, generating billions in net inflows. This isn't retail FOMO. This is a calculated re-entry by the big players. But what happened next shocked even experienced investors. Despite the bearish macro headlines and the seemingly fragile price action, large Bitcoin holders have actually increased their accumulation. Wallets holding at least 1,000 Bitcoin have reached their highest level since March. This is the exact opposite of what we'd expect to see during a period of institutional panic. It suggests that the ETF outflows were likely a tactical maneuver, a shaking of the tree by the giants, and now they are quietly sweeping up the cheap coins from those who capitulated. The so-called new whales are taking losses, while the old whales are holding flat, indicating the pain is isolated to recent buyers. So, where does this leave us? The price is trapped. We are in a technical range between the upper 60s and the crucial support zone of $60,000. Analysts are pointing to a massive upcoming Bitcoin options expiry worth nearly $10.5 billion, with the max pain level sitting far above the current spot price. This is a pressure cooker. The volatility compression we are seeing is textbook technical analysis. Periods of low volatility are almost always the precursor to explosive moves. The market is holding its breath, and the tension is palpable. But the biggest question remains: is this the quiet before a catastrophic breakdown, or the silence before the most aggressive breakout we've seen this cycle? The smart money is betting on the latter. They see the macroeconomic uncertainty, the geopolitical tensions, and the shifting monetary policy. And they are accumulating. The signs of a bottom are there: the fear in the market, the capitulation of new investors, and the relentless buying by the whales. The path ahead is clear for those who are watching. Don't let the silence fool you. The Bitcoin market is entering a critical phase. The coin is in a compression phase, and the breakout, when it comes, will be swift and likely violent. While the mainstream media focuses on the negative price action and the fear, the smart money is positioning for the future. The question is, which side will you be on? This story is far from over, and the developments of the next few days will be critical. We will be watching every move, every ETF flow, and every whale transaction to bring you the truth behind the headlines. We are entering the most critical phase of the market cycle right now. For more amazing videos like this, subscribe to our channel Sawyer Silver Vault.